The broadcast is now starting. All attendees are in listen-only mode.
All right, everybody. A very warm and heartfelt Happy New Year and welcome to Nadex from me. My name is Philip and I will be your presenter for today's webinar. Sorry for the bit bumpy start. We had some network issues, but I hope that those are now have been sorted out and that you guys can actually hear me well and that everything is just working like a charm. I would appreciate a very short yes or why in that small questions box that you can see to just let me know that both the audio and the screencast are working properly. About the screencast, let me just quickly switch a slide here. Perfect, guys. Thank you very much, everybody. Really appreciate it, especially today as, yeah, those issues, what a way to start the new year. All right, just a second while I'm taking care of things here. And this looks good now. All right, perfect. You guys have tested that question box right now, and please, through the course of this webinar, if something is not clear, if you want to explain me things in a different way, if you have questions, that's what we're here for. We want to learn something together. And for that reason, you are not interrupting me, you're not interrupting my flow. It's perfectly fine to ask questions, and I really want to encourage you guys, ask as many questions as you can as we move through the webinar. Today's session is scheduled to run for around about 1 hour. We'll have to see how we will manage with time. We don't have really a very hard fixed agenda. It's just I want to give you guys an introduction. What are spreads and how can they be used screening Forex and then, of course, trading Forex markets. But before we get started, oh yeah, Kylie, you're absolutely right. The screen is the same. Let's change that. Here's our very first risk disclaimer. And I have to make you aware of that one. So please make sure you're okay with this and take your time to read it before continuing with the webinar. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the markets. Neither Trade with Position nor myself are investment advisors, and therefore nothing that we say should be considered to be actual investment advice. Especially true for the live part of today's section, which is pretty much 95% of today's webinar. We will be analyzing the markets together. We will be having a look at what's moving, which markets I would consider potentially for trading right now. But again, it's just me rambling, me analyzing those markets. In the end, it's your money which is on the line if you want to place trades. You must own that trade. You must feel absolutely at home when you take that position. So it's never advice from me. It's always just educational purpose. So please make sure you're okay with this. And that being said, we also have here on the next beautiful slide, the risk warning from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex instruments include Forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to Nadex is subject to US regulatory oversight by the CFTC. That was just the proof that it's has not been recorded and it's not an audio tape which is played for those disclaimers. It's always live and real. All right, guys, that being said, let's have a look at it. Today's agenda, introduction to trading spreads. You know that you can trade binary options here at Nadex and you can trade spreads. Spreads have sometimes this aura of being a little bit more complicated, which is absolutely not the case. Today, we want to focus on spreads and we want to give you guys an idea how those spreads work and how you can use them to trade the markets. What actually are the benefits of trading spreads? Live market analysis, market scenarios and setups on the Forex market, utilizing spreads under different market conditions, understanding and management of risk and reward. Of course, those instruments are also available on other markets as well. And with this context, you might have noted that cryptocurrencies, bitcoins are also available now, or derivatives on those markets are also available now here at Nadex, so maybe you want to check those out as well. What you learn here today is applicable to any market and any time frame. It's a way to analyze the markets. It's a way to trade the markets. It's not dependent on any market by any time frame. So let's have a look and get started with the introduction to actually trading spreads. The question is, what are spreads? Spreads are a simple derivative with built-in floor and ceiling levels. And within that range, price actually moves along with the market price of the underlying market. But you don't have unlimited upside, you don't have unlimited downside, you're actually capped. Those levels, which are on the same line where you can see which spread to actually trade, those levels define the lowest and highest points at which you can settle. And even if the market drops far below the floor or moves way beyond the ceiling, it doesn't matter. That spread is kept within that range. And because it is kept within that range, you always precisely know your risk when you open that position, and you also know your maximum potential gain that could be realized if the market really goes all the way in your direction. You always know your maximum potential loss and maximum profit from the outset. They are based on underlying markets such as a commodity or Forex, here with our examples. Benefits, they are suitable for the retail trader looking for leverage and hedging opportunities. We'll have a look at that in just a moment. You trade with strictly limited risk. I can't stress this enough. You know your risk position, the maximum amount you can lose the very moment you open that transaction. That's definitely not the case if you were to trade conventional plain vanilla options or futures or CFDs or any other market or any other instrument. Let's not talk about the market. Let's talk about the instrument. I will touch the distinction between instrument and market in just a few moments. Low collateral required to trade. It just takes very few bucks to get started here with trading. Take highly leveraged positions if it suits your risk profile. Again, risk and that leverage especially is a double-edged sword. Usually with great power comes great responsibility. You have to think about what you're doing there. But again, those trade tickets when you open that transaction show you what you can make if everything works like a charm, but also most definitely what you can lose if things do not work out. Multiple daily trading opportunities. Those binaries, those spreads are options, which means they settle at a given point in time. They have a time to expiry, and then those contracts expire, and that's judgment time. At that point in time, you will have to it's decided if that option is worth something, and in the case of a spread, how much, or if it isn't. All right, so let's just have a look at the markets and see how everything is working right now. This was a little bit abstract right now, but let me just build my case. We're looking here, and the idea and focus today is, of course, on Forex markets. So how do I approach those markets? How do I want to trade those markets? At first, I must know which market do I want to trade. It's not that I come home from my normal day job and sit down and think I want to be trading right now, so I just jump in and buy something or sell something. Doesn't matter what it is. No, first I must have an idea. I must have identified some kind of setup, which during my best back tests showed me that it gives me an edge. What is an edge? An edge when it comes to trading is that if I trade that very same setup over and over again, the law of big numbers starts to work for me. If I know that this setup has an edge, which means I should be able to win this setup potentially more often than I lose that setup, and if the gains that I can realize if that trade goes my way are larger than the losses that I will have to pay once the trade doesn't work my way, once those two things start to come together, having potentially more profitable trades, and those potentially profitable trades should be larger than the losses. Those two things together, this is my hopefully positive expectancy, and this is what gives me an edge. And this is what tells me if I trade that same setup with that edge over and over and over again, I will have losses, but in the end, the potentially profitable trades should be larger and more, and in the end, I should have made more money than I lost on the other trades. Many people think trading is just about having winning trades. It's if you have a losing trade, you screwed up. You didn't make it as a trader. That's not the case. Trading is about statistics. It's about probabilities. You want to win more often than you lose. And it doesn't mean a thing if that next trade is a loss. I can have analyzed the markets perfectly. I could have placed the most beautiful trades. All my colleagues here at Trade with Position could have patted me on the shoulder and said, Philip, excellent trade. It could still be a loss. That's what makes trading so difficult. You can't really attach, or you can't really connect how well you performed your analysis and your trade and your trade execution with the result of that trade. One trade means nothing. It's always a large sample set of trades. So we want to look for certain patterns. We want to look for certain setups that give us that edge, hopefully give us that edge. And what I like to look at is once price has started to push higher, I want to see that the market is trending. We had the advanced course just in the beginning, during December, just a few weeks ago. And let's just do a quick recap about what those rules actually are and what we're looking for when we're looking into finding trading opportunities. I want to see that the market is in a trend. Our strategies are trend following strategies. That's what we're looking for. There are other strategies out there which also work like a charm. It's just our way to approach the markets. It works for us. You must find something in the end that works for you. So keep that in mind. This is not the only way to trade the markets. It's the way that works for us. This market is in an uptrend. How do I know that it's an uptrend? Well, it makes higher highs and it makes higher lows. Further, I can see that my moving averages have started to fan, which means the 10-period moving average is above the 20, above the 50, and well above the 200. And by the way, that market here is euro against the US dollar on a daily chart, but it doesn't mean a thing. I don't care what the market is. I'm just looking for something which tells me, yeah, something might be going on here. Price is now pulled back here into our moving average buy zone, which is what we call the area between the 10 and 20 period moving average here in an uptrend. And usually I would be waiting now for a small bullish candle to set up, which then should trigger me into that trade for a potential next move higher, next leg higher. And this is what I would be looking for. However, there is one thing, and let me just draw in here my horizontal line. We can see that price has tried to push higher here and correction, and it tried again. And let's just try and see if we can identify some kind of level here. And it's not really that precise. It's not really there. Yes, one touch here, another touch here. How did I get this level? Well, I just picked it on my targeting package and put it there. And then I started to squeeze it around and push it around and try to find that sweet spot. And you see, if I put it here at this level, which is pretty close to 120.90, I can see I have one touch, I have another touch. Now, what makes a horizontal level? At least two more or less precise touches of the same price level. The more touches, the better. It would be better if we had a third touch or a fourth touch, because then I know that this level here truly is gaining more and more significance, and that this level here actually is something to be reckoned with over the next few days for trading. Why is this level important? Why did I put it here? Well, if price is now about, maybe, if I get that small bullish candle and price starts to push higher, there's now some kind of obstacle in the way. It's now a little bit harder for price to actually push through and just make new higher highs, because let's be honest, if I can see this level here on that chart, many people can see this level on the chart. And this is why those levels actually work so well. Sorry guys, just wanted to zoom out. And the question is, why do those levels actually work so well? Well, the point is, and you see in the most recent history here, going back to 2015, that level has not been really that important in the past. So far, it's just two touches. Yeah, it's there. We should pay attention to it. Is it really a trade killer for me right now? No, it wouldn't be. But yeah, it's something to pay attention to. The perfect setup that I would be looking for now would be a small bullish candle and prices going higher. And it would be really, really nice to get and hit my profit targets even before price was about to retest this level. Many people see those levels Same thing here with those levels. And I wouldn't be surprised if price continues to push lower a little bit more to test this level, which has been established. First touch here, more and more touches here, acting as resistance at this price level, acting as support here, acting as support here, price broke below, acting as resistance again, coming back, acting as a resistance cluster here, acting as resistance once more, price has broken above this level, price is about to pull back. What should be happening now? It's rather likely that price, if it was to hit this level, that now this level here could be acting as a support. So small bullish candle in this area here, and then a retest of the old high. Do I think it's likely that price will break beyond this level? No, I don't think so. There's an obstacle, it has to be reckoned with. But if we want to trade this move within that range, nothing wrong about it. So let's keep in mind here, we had a look at the euro against the US dollar. This looks rather interesting. It's not a perfect setup. First, I don't have my trigger candle now, and overall that market here, yes, technically on the daily it's in an uptrend. However, it's still somewhat range bound here. And on the daily, it's not really that convincing, that strong of a setup. We could now, of course, drop down to lower time frames and see if something is tradable there, if we really think we must trade euro against the US dollar. But guess what? We don't have to. There are many more different markets available for trading. So let's just have a look at another one. And here we're looking at the Australian dollar against the US dollar. And pretty much what we're seeing here is that move higher here, that trend. This looks stronger than what I've seen here on the US dollar. Let's start to put in some horizontal levels here as well. You see, I just put it there, and I try to see if I find something where price is hitting those levels, and we have reactions to those levels here and there again. And let's just start to tweak those levels just a little bit. I think this works better. We have precise touches here at the open and the close of those candles, a touch here, several touches there and there again. Pretty much the same thing. We're waiting now for price to pull back. Do I think it's likely that price will push through this level? No, I don't think so, because this level has seen more tests. Market participants have reacted to this price level more often in the past than they did, for example, with euro against the US dollar. So the Aussie against the US dollar, it's in a nice uptrend, strong fanning pattern here, currently pulling back a little bit. And then we'll have to see how it continues there. Let's have a look at euro against the British pound. Now, just compare the chart structure that we have seen on those other charts and what we're seeing here on euro British pound. This is a range-bound market. On the other markets, I've seen fanning patterns in my moving averages, good separation, clear new higher highs and higher lows, stuff like that. What can I see here? Well, I would have to be really, really precise to realize, yeah, this is a lower low than here. This is a lower high than here. Is this a downtrend? I don't think so. I think this is absolutely nothing. This market overall has been range bound. And if I would have to pick one market now from those three, which we have analyzed so far, definitely not this one. Just look at what this market has been doing here. It has been pretty much sitting in this range for all the time. And pretty much the same thing here. Let's have a look at this one there. Technically, it might be a small, slow downtrend on the higher time frames here already with higher highs and higher lows. But again, just have a look at those moving averages. They are all over the place. This here is a trend. Compare the structure of those moving averages here with what we're seeing here. Do I want to trade this market now in a directional way? No, I absolutely don't want to do it. Guys, does this make sense? If there are any questions, please by all means let me know. I'm just trying to make sure that I see all the questions coming in, but I think so far we have covered everything. But again, don't be shy. If there's something not clear, just let me know. All right, So we're looking at euro against the British pound. Let's have a look at cable, British pound, US dollar. Better chart structure. We're looking at an uptrend, but again, it's a rather slow uptrend. And why is it slow? Well, yes, it's a new higher high, but it was a slow higher high. What do I mean by a slow higher high? This ascension here, this move higher, was quite steep. And then the market spent quite some time to pull back. It was not a steep pullback, but rather it was an extended slow pullback. And guess what? This loss of momentum is visible here both in RSI and in MACD. And so once price made here a new higher high, MACD made actually a lower high. RSI actually made a lower high. So what we see here is bearish divergence. Yes, the market is still in an uptrend, but we have lost momentum, and it's not really looking that strong, that powerful. Sue is asking about the fanning pattern. No problem at all. You can see what the moving averages have been doing here in this area. It's not really clear where everybody is. Yes, the 10 seems to be there, the 200 a little bit below, but the 20 and the 50, they are tangling all the way, they are crossing, and it's you have to use a magnifying glass to actually see what's going on there. This is a clear indication of a sideways market. Those moving averages are all over the place. However, once price actually starts to move, once price starts to trend, you start to see that those moving averages are actually moving apart. And the fanning pattern is actually, if you just take your left or right hand and spread those fingers out, the way that those fingers are now moving and pointing is pretty much what we want to see here with those moving averages. So the 10 period moving average is moving away from the 20, which is moving away from the 50, from the 200, but they all start to point roughly in that same direction. You start to see good separation, space in between those moving averages. When the moving averages are looking like they're doing here, this is what we call the fanning pattern. And this is a very quick and easy way to actually see and understand what those markets are doing. If I see fun exercise, try to hide price action from your charts and just have a look at those moving averages. You know what price is doing by just looking at those moving averages. Those patterns here, this is what we're looking for, this is what we're looking for. Again, a little bit slow, and you can see that it's slow because the distance between the 10 and 20 is closing down, it's narrowing down. But apart from that, trending price behavior, definitely not trending price behavior. And you see the market has been going sideways here for about 20 bars. So again, those sideways moves can be perfectly tradable with another strategy. With our strategies, we're looking for trends and trend continuations. So I'm looking for fanning patterns. I'm looking for good strong action in price behavior. British pound, US dollar, looking nice, but again, not as beautiful, not as strong as I would have hoped them to be. US dollar against the Canadian dollar, the loonie. Beautiful downtrend. This is what we're looking for. And you can see price is pushing lower. It's moving back towards our moving average sell zone, and it's pushing lower. It's correcting a little bit deeper here and again. And guess what? This move lower, yes, it made a new lower low, but you can see with the speed of the move lower, this was a very extended correction, and lower and lower. But due to this slow correction, please see and note that both MACD and RSI are diverging. This is bullish divergence. We are in a downtrend, but again, it looks rather likely that at that point the market has run out of momentum. And when this correction started, this would have kept me out of looking for trend continuation trades here in this area. Sure enough, the moving average is crossed, and we're seeing now here an uptrend, higher highs, higher lows. However, recently this has changed. We are seeing now lower lows. We can see that the moving averages have started to fan once again into in the downward direction, and 10, 20, 50, and price is now about to pull back here towards our moving average sell zone. So this might be an interesting market to look at. Let's write that down. And actually, guys, this is my scanning process every single day that I'm trading those Forex markets. I'm walking through all those markets and I'm just doing exactly what I'm describing to you guys here. Let's just pick here this line tool, and I see that we have touches to this level here and there, and price is sitting here now at this level too. Now we're pulling back here a little bit, and let's just try it and see if we find other levels here that can be used for trading as well. And this seems to be also an interesting level. We saw reactions here and there and multiple reactions here. A pullback now on the daily chart to this level would be rather deep. Can happen, but I'm not sure. If I want to trade, by all means today, I would be looking here from those markets I've seen so far, I would be looking at the loonie. The main idea here is, again on the daily chart, that I would be waiting for a trend continuation here, because currently it looks like we are in a pullback. Why is it a pullback? Well, price has been going lower. This red candle here, and let's again just make it larger. This red candle here is a pretty bearish candle, but please note the lower shadow here is quite a little bit longer than those shadows that we've seen here before, which is a sign that sellers were not really able to keep price at those low levels. Buyers came back and started to push price higher. We had a bearish candle, we had another bearish candle, and the next candle, what's that one? That's a rather indecisive candle, because the upper and the lower shadow pretty much have the same length, and we have a very small body sitting right in the middle of that range. The market doesn't quite know where it wants to go. Buyers and sellers are now pretty much have the same strength, and it's a draw. They're still fighting for control, but pretty much it's a draw. After this move lower, this is a little bit more of a bullish sign, and the body color is green, which is just a little bit of icing on the top, but even if it was red, it would still be an indecisive candle. Today's candle, however, is already a bullish candle, and you can see this behavior pretty often, that after a strong move to the downside, those candles tend to become smaller. See the size of this candle compared with the next one, much smaller. Bearish candles become indecisive, then they slowly turn bullish. So what we are seeing here is now a retracement. Let's keep just in mind that this is now a counter trend trade, which means the trend here is to the downside, price is pushing lower, and we're now just trading this correction. Would I trade this here now on the daily chart? No, I probably wouldn't. But let's start to have a look at those lower time frames. That's a downtrend on the daily chart. On the 4-hour chart, yes, this is still here a downtrend, but guess what? We have a high, we have a higher low. Now we're making a higher high. Those moving averages are closing down. The trend for me on the 4-hour chart already has changed. It's not a perfect tradable market here for me with my strategies, with my setups on the 4-hour chart, but we have to note that the trend already has changed. And once again, lower lows in price, but again, higher lows in MACD, pretty much the same low here in RSI. Again, bullish divergence setting up here on the 4-hour chart, hinting that the market might be going higher. Let's have a look at the 2-hour chart. Much more pronounced, higher highs and higher lows, higher highs. The 10 has already crossed above the 20. Let's have a look at the 1-hour chart. Sure enough, we start to see the uptrend now. We start to see that the 50-period moving average starts to fall into place here, and the 10 is already above the 20. So the 1-hour chart already starts to give me that uptrend that I'm looking for, and we have convergence. Those higher highs in price clearly go alongside with higher highs in both MACD and RSI. And if we drop down now to a 30-minute chart, higher high, higher low, higher high, higher low. And here in this area, there those setups would be waiting for me if I wanted to trade this market on that time frame. The idea is that usually I want to see and trade in the direction of the daily market, because I feel that this is always the strongest market, the strongest push, and But now we've seen the daily is correcting, and those lower time frames giving me that same story. It's a correction, just don't try to ride it to 150. No, we're here in that range. It won't go forever, but as it's going right now, maybe it's something that could be tradable. Let's drop down further. Let's have a look at the 15-minute chart. And again, guys, pull back, small candle setting up here very close to the buy zone and higher trend continuation. That's the main idea. That's the main logic here. And now the question would be, okay, how could this be potentially tradable using spreads? And again, it's not about this market. I wanted to show you guys first, I don't want to trade anything with spreads. I want to find a good setup, and then do I want to decide, can I trade this setup now in a good way using spreads as my trading instrument? So far, guys, does this make sense? Are there any questions? Please just let me know. All right, perfect. Let's move on. Now, let's have a look here at the Nadex platform. And let's just close this down. We're looking here at US dollar against the Canadian dollar. And I want to have a look at that same market here. I'm here with Forex spreads. I'm looking at US dollar against the Canadian dollar, and I'm looking here at the 3 p.m. cycle. This 3 p.m. cycle now gives me 2 hours and 28 more minutes on my trade. Again, it's a demo account, which means it's not real money. I'm placing trades here that I wouldn't place on my own account, and I strongly advise that you guys don't follow me with my trades, because once again, it's just for educational purposes. I want to illustrate points, I want to make things clear, and I don't care what the running P&L of that trade, of that position would be. All right, so US dollar against the Canadian dollar, the idea might be that price might be going higher. The perfect point in time to enter that trade would be, of course, around about here. We would have been here very close to our moving average buy zone. Right now, timing is not great. Currently, it looks like a little bit more bearish action is going on. But let's just have a look here at how this could be traded with a spread. A binary option just has a strike price, which means that strike price at the end of that option's life cycle, at expiry or expiry, I think both ways are correct, but if I butcher that term, please let me know. I always wondered how everybody is pronouncing it. At expiry, you have to look at if the price is above that market price of the underlying is above that strike price. And if it is, then that option contract settles for $100. And if it is below the strike price, that contract settles for exactly 0. Therefore, the name binary. However, with a spread, it's a little bit more sophisticated. With a spread, you have the floor and you have the ceiling. Now, let's have a look at what those contracts are available for trading here on the loonie for the next 2.5 hours approximately. Price is currently trading at 124.642. So let's have a look which of those contracts here are very close to those levels. Let's assume that I have a bullish assumption about what the loonie might be doing over the next few hours. Well, I could be looking here at those contracts. Which contract would make most sense for me to trade given my basic assumption, and again, without making any recommendations. If I want to open a bullish position, I want to enter that position as close to the floor of that spread as possible. If you think about it, that spread defines a range between which the value of that spread appreciates or devalues as the underlying market moves. So in that range, given here from the floor to the ceiling, price is able to move, or the value of that spread is able to move with the underlying market. So this means if I think price might be going higher, I want to enter as close to the floor as possible, because I want to have as much room above me for price to move along with me. So let's have a look at this contract here. Range 121.70, 126.70. I'm sitting pretty much here, not right in the middle, but closer to the ceiling than the middle. It's not really a sweet spot for me. Let's have a look at the next one, 121.70, 24.20. Well, I'm currently trading here at 24.641, which means I'm already trading above the ceiling here. And you see there's no offer. I'm sitting very, very close here at the high levels here. That trading that contract here doesn't make any sense at all. Let's have a look if I wanted to trade this contract, if I want to buy this contract. There's no offer. No, I don't want to sell, I want to buy. My maximum loss here on one contract would be $248, maximum loss. My maximum profit, however, would be just $2. Why? Because this contract only can move from 124.18 to 124.20. And even if the loonie now shoots to the moon and beyond, it doesn't help. I'm capped at the ceiling. It doesn't make sense for me at all to stop here to open that trade, because my reward to risk ratio is not even ugly, it's way beyond ugly. I'm risking 248 for potential profit of just $2. Horrible reward to risk ratio. So I don't want to enter close to the ceiling. I want to enter close to the floor. Let's close that window here. Now, 124.6280. This one here again is sitting pretty much here in the middle, but let's have a look at that one here at the top. Now, this looks definitely different. The floor level is 124.20, and this means price can drop to 124.20, and I would join that move until this level, and that's it. Even if price dropped further than that doesn't mean a thing. That's where I'm stopping. And if I open that trade now for the price I'm paying right now, this means my maximum loss per contract is $44. My maximum profit, however, is $206. But again, let's keep in mind what does have to happen for that maximum potential profit to manifest itself. Price would have to trade up to 126.70 and stay there or move above it at expiry within the next 2 hours and 22 minutes. Ceiling level 126.70. Do I think this is likely? No, I don't think that this is likely. But if I think the price might be moving higher, I could be joining that move. It definitely gives me enough wiggle room for that trade to play out and to work for me. What's my reward to risk ratio on that trade? Well, I'm risking $44 in order to make potentially 206. Again, I don't think it's realistic that I will lose all 44. Let's step back one bit here. We have 2 hours and 20 minutes left. We're looking here at, I think those have been 15-minute candles. So we're looking now at round about 10 more candles to form until this option contract expires. Does this make sense? 4 15-minute candles in an hour, so 8 within 2 hours, and within 2 hours and 20 minutes, 9 to 10. So what I have to assess now is, do I think that within the next 10 candles like those, price is able to travel? Let's draw those in, 124, and let's just move it over there so that you guys can better see where I put those levels. Let's put in some levels here. So I want to put this one in at 124 and the floor is at 124.20. Sorry, 124.20, and let's make that line in this beautiful orange. And let's do another one. and now I'm looking at the ceiling level of 126.70. 126. I'm sorry guys, I'm typing here pretty much blind because the mic is in the way. All right, 126.70. So, and I have to push this thing here to even be able to show you guys where that ceiling goes. All right, so this is, let's do it like that. All right, this is pretty much a visualization now of the floor and ceiling levels of that contract. You see, I'm very close now to price. I'm way closer here to the floor than to the ceiling. I have a lot of wiggle room for price to push higher and shoot higher. However, do I think that it's likely that within the next 10 candles, roundabout, something like that distance here, that price is able to hit this level here? No, I don't think so. Do I think that it's likely that within the next 10 candles price is able to hit this level here just based on the historical volatility, just by eyeballing those candles? Yes, that can happen. So keep that reward to risk ratio here on that trade, especially with that short duration here. Take it with a grain of salt. You will pretty much by all probabilities, you will not be able to hit that maximum profit. That maximum loss, yeah, within 10 candles, that can happen. So keep that in mind. Guys, does this make sense? How to pick the floor and ceiling levels and decide which contract might be the right contract here to trade? Pretty much the perfect setup that I would be looking for in that example would be something which is now really sitting here absolutely dead end at the floor level, which would give me pretty much all of the upside, but almost no downside. Because then I can really start to tweak those numbers and make that spread actually work for me. This year is pretty much now for me in no man's land, and I wouldn't be really that interested in trading that spread at the moment. Just scrolling through the feedback. All right. Bob is asking good questions about the range of available markets here for trading. Just make sure to let Nadex know which kinds of pairs you would want to trade, and I'm pretty sure that they are open for suggestions here. In the end, it comes pretty much down to them being able to hedge, which yeah, the hedging aspect, that might be something, because in the end, I think the best way to hedge in the United States, and you know that Nadex is based in Chicago, is using the futures market. And I'm pretty sure that those futures available for trading here are easily constructed using hedges in the underlying futures and futures markets. And that might be a reason why some spreads like those that you have, or yeah, spreads that those you have mentioned, Forex pairs, might not be so easy to implement. But again, give them a call, let them know, and I'm pretty sure that they will give you a very good answer, more profound than I can do right now. But Bob, thank you very much for that question. Apart from that, I think we're good on the questions. And guys, again, if something is not clear, just let me know. So, is this something which is tradable right now? I don't think so. It's yes, I can do it. Can this trade work out? Yes, it could. Am I really thrilled by the setup? No, I'm not. Am I thrilled by the location of the floor and ceiling levels? No, I'm not. And one rule for my own trading is I have to be thrilled. I have to be absolutely excited about the trade and the setup and say that's the trade. And even then, do I only want to risk 1% of my account on that trade? Risking 1%, how can I achieve that? Let's have a look at that trade here once again. And guys, maybe that's a good, that has been a good exercise. Just put those floor and ceiling levels on your charts to just give you a visual idea about where those levels actually are. And do you think it's realistic to hit either the floor or the ceiling within the remaining amount of time available. So again, just by eyeballing it, the human mind is so good at doing very complex math just by eyeballing. Same thing when you're crossing a street. You don't know to have the precise vectors and velocities and speed. You usually know if you can make it across the street before the car hits you or not. The math that goes on is just profound. You don't have to write it down. Your brain can do it. It's the same thing here. Do I think it's rather likely that this can happen? Yes. Do I think it's likely that this can happen within the next 10 bars? I don't think so. So keep that in mind. Let's just assume that that could have been a promising trading opportunity here. How does this risking 1% of my account, which is pretty much what all successful traders are doing, how does this work? The very, very beautiful thing about Nadex contracts and the platform is I know that my maximum loss for that trade, trading one contract, would be $44. Now, it's a demo account, which means in this demo account there are $25,000. If I want to risk just 1% of my account, this means that my dollar risk on that trade, not my position size, but the absolute amount of money that I'm willing to put at risk, would be $250, 1% of 25,000. So in order to get my position sizing right, if I thought that this was the trade, which it isn't, I would just now increase the number here, the size of my trade, and you can see that the maximum loss increases. And the only thing that I have to do now in my head all the time is this number smaller than $250? Because that's my account size. Then yes, I increase. $264. No, I don't have an account of $26,400. I have $25,000. So I can trade 5 contracts with a maximum risk here of $220. And again, please, that's the first time I see this beautiful, let's just put it there and wait for a moment and appreciate it. When buying, and you see how it's calculated, you see the precise formula. I haven't noted that before, guys. I really like that. So sorry for being carried away. The maximum profit, again, here also with formula, very nice. What does have to happen for that maximum profit to manifest? Price has to be there, up there within the next 10 bars. Again, probably not rather likely. But if I was able to enter here at the very, very floor level, my risk per contract wouldn't be $44. It maybe would be $5. And then I could be trading quite a lot of contracts. And then even if price moved a bit in my direction, that would usually result in a very nice reward to risk ratio on those setups. And this is how you can make those contracts actually really, really work and really shine for you. So keep that in mind. You want to enter as close to the floor if you want to go long, or as close to the ceiling if you want to go short that market. And then reward to risk starts to work really for you, and you just increase the number of contracts here until that maximum loss is in that area where you want it to be. Our suggestion, and what is in line with all the pro traders, is think about 1% of your account as a risk on any one trade. All right, any questions on the risk sizing part, on the position sizing part? And guys, if you adhere those risk management principles, risking 1% of your account per trade, you will have a very, very hard time to blow up your account. Sure, it can be done, but it will be very, very hard work for you. And this is the most important thing, survival. It's not about becoming a millionaire overnight. Trading is about making the law of big numbers work for you and to survive today so that you can chip away every single day, make small gains, more small gains, more small gains. And in the end, at the end of the year, you will be surprised what you actually achieved to make out of your account. Stay small. Don't take excessive risks. If traders don't make it, it's usually because they traded way too large. Going with this 1% risk position sizing, definitely you can't really go wrong with that direction. I'm pretty. We mustn't make any recommendations, but again, this has worked too well for far too many people, including myself. So that's the one big thing. Focus on risk management and staying small. All right, guys. So we have about 10 more minutes left. So I really encourage you once more to hit me with your questions. And in the meantime, I would suggest that we might have a look at some other markets and see if we might find some better setups there. And again, we're looking at a 15-minute chart. Let's have a look at the daily. Aussie against the Japanese yen. Once again, pulling back. Beautiful trend here. Strong trend. Nothing wrong with this market here so far. Let's zoom out a little bit and have a look here at where those levels might be. And once again, all those markets here have been pretty much hitting those levels where they have been in the past. So this is a little bit here on the not worrying. There might be better setups out there. This is just something I don't want to see that obstacle. I want to have a clear blue sky above me, and things should be easy to go that way. Once again here, just compare what we saw just before. This is a beautiful uptrend. See the structure of those moving averages. US dollar, Japanese yen, sideways market, going nowhere. I don't have a clue what's coming next. I will never know what is coming next. But here I can make an educated guess. I know it's an uptrend. I know we have pulled back, and it's rather likely that we will see at least the retest of this level here over the next few days. Does it have to happen? No, it doesn't. But I think it's a little bit more likely than not. And this little bit more likely is pretty much everything that we need for our trading. Here, I don't have a clue what's going on. I see that we have clearly diminishing volatility because those lows are high, the highs are lower, the lows are higher. You can easily come here with your sideways triangles. That's not a pattern that we're usually trading. It's just not the environment for our trading setups to work. So we're not really really interested here. Again, there might be beautiful trades and setups and strategies which are just looking for those kind of setups. If that's your game, if that's what you're looking for, perfect. By all means, go for it. For me, I'm looking for different stuff. Let's put it that way. British pound, Japanese yen. Slow move to the upside, slowly crawling. It's an uptrend. We see higher highs. We see the fanning pattern. But overall, it's not really that convincing. It's not really that strong. It's not really that. Euro, Japanese yen, sideways market almost forever. Made an attempt to rally. And you can see here, beautiful shooting star candlestick. By all means, you don't have to know the names of those candlesticks. But you want to see here, let's make it a little bit larger. Why is this a very nice and telling candlestick? Well, the bulls tried to push the market higher. It didn't work out. And in the end, all this move to the downside has been reversed. And yeah, it's a sure sign after this move higher that now a correction is rather likely. Sure enough, this correction is on its way. And let's just try to see if we can fit in some kind of level here. And we've already broken below this level. If we get now a small bullish candle setting up here just on top of this level over the next 1-2 days within the moving average buy zone, then this might be a very nice and interesting setup here on the euro against the Japanese yen. Right now, I always want to see my setup. It's not that I want to anticipate about what might be coming next. I want to see it. I want to see confirmation. The trading strategies that we apply, we pretty much gather a lot of small advantages. I can see an uptrend, that's a bonus point. I can see price has started to pull back into a moving average buy zone, bonus point. I can see the moving averages are fanning, bonus point. And I want to gather as many of those bonus points as possible. And sitting on top of this level, big bonus point, in the moving average buy zone again. And the more I can stack those advantages in my favor, the more likely it becomes that this trade will work out. Will it work out? I never know. Nobody knows. It's just becoming a little bit more likely. Michael is asking a great question. Thanks for that one. Hi, for a beginner, how much time per day would you suggest to spend on this? You want to be trading how you want it to be. This means if you can spend 15 minutes per day on your trading, that can work. You don't have to be glued to your screen. My approach then would be, okay, I just want to focus on maybe 3 different markets. I want to learn and understand how to read those charts. And I'm focusing on a certain time frame, maybe the daily chart, maybe a 1-hour chart. You want to have a watch list and you want to be looking at those markets every single day. This is how I would start if I had little time. If I had more time, my watch list would be longer. I would be focusing on more different time frames. There is not that one way to be a successful trader. It's not that you have to trade 1-minute charts in order to make the most money. It's not that only trading on the weekends. How can you trade on the weekends when the markets are closed? You can analyze those markets. You can put your orders in. You can prepare yourself for Monday. Once the markets open, you just place those orders and you're good. You're done. You did all your homework over the weekend. Those are very different sides of the same spectrum, and they all work equally well. You just have to put the effort in. But if you're just getting started to feel the flow, I would suggest maybe 1 hour per day. But again, if you have less time than that, no need to stop you from pursuing your trading goals. Trading is a lifestyle choice. Bob's asking about my moving averages, and yes, here on that chart they are EMAs, exponential moving averages, and but you could easily use simple moving averages as well. The usage stays the same. I'm looking for this fanning pattern. I'm looking for pullbacks, and yes, the periods are 10, 20, 50, and 200. Play with the EMAs, play with the SMAs, and then have a look and see what you like best. Then just stick with it. I don't like switching around all the time because in one market this works better than on the other. Any market, any time frame. It's the same set of analysis tools that we use on all different markets and all the different time frames. All right, guys. So maybe here's something with euro against the Japanese yen. There might be something up. Again, with those spreads, just trading for the next maybe 2 hours, that's a little bit too short for me here. I would be revisiting this market here over the next 1-2 days and see if something is moving there. Where does this trend change start? I'm looking for a small bullish candle to set up here. Well, it has to start on the lower time frames. And if we have a look here at the 5-minute chart, sure enough, you can see that we already have made a higher high and a higher low and another higher low. Moving averages are switching over here. Is this the beginning of the rally back here to and guys, just see how beautifully this level has been touched here on those lower time frames. Just pull back and again. Yeah. I do not suggest that there's a trade here on the 5-minute chart. If you want to trade in anticipation of that move, I would probably wait until we see a retest of this level from above, and if I get then a spread with the floor level at 135.50, that might be really, really nice and interesting. All right, guys, very little slides today. A lot on the charts, a lot on the markets. Nevertheless, I hope I was able to make my point clear. If something is not clear, please, by all means, let me know. I'll try to answer your questions as good as possible. The hour, unfortunately, is pretty much up right now. So if there are any questions, let me know. And those of you who have to leave right now, thank you very much for tuning in. And yeah, I hope you enjoyed today's session. You found it useful. Sign up for those other Nadex webinars here, the same place where you sign up for this one. And Arthur, thank you very much for the feedback. Really appreciate it. All right, Lou, thank you very much. Greg, perfect. All right, guys, thank you very much for tuning in. And yeah, that's it from me for this week. I hope you guys have an awesome new year, 2018. And of course, as always, happy trading. Take care. Thanks again. And yeah, catch you next time. Thanks. Bye-bye.